Ladies and gentlemen, this is TVP World. I'm your host Benjamin Lee, and welcome aboard the Eastern Express. Now, Russia's wartime economy, once strengthened by defense spending and resilient in the face of sanctions, is now showing clear signs of strain. In a stark shift, the International Monetary Fund has downgraded its growth forecast for the country, citing weakening industrial output, softer employment, and failing oil revenues. As global pressures mount and domestic momentum fades, Russia appears to be heading towards economic stagnation. Here's a look at our latest report to find out more.
The Russian wartime economy has long thrived on a paradox: military mobilization fueling GDP growth. But that engine is sputtering. This week, the International Monetary Fund sharply downgraded Russia's economic forecast for 2025, slicing projected growth from 2.6% to just 1.8%. The slowdown signals a harsh reality. 2 years of wartime boom are giving way to stagnation. As military production plateaus and labor shortages grow, even the state's heavy hand can't prevent fatigue from sweeping in. The IMF also cited falling real incomes, a labor crunch driven by conscription and rising inflation, now expected to exceed 6% this year. What was once hailed by the Kremlin as adaptation to Western sanctions now looks more like improvisation. And yes, Russia still exports oil and imports dual-use goods through a vast network of intermediaries. But it does so at growing cost, economic and political. The ruble is down, capital is scarce, and foreign investment remains a ghost of the past. Still, Moscow insists the pain is mutual. In her Wednesday briefing, Foreign Ministry spokeswoman Maria Zakharova accused the West of sabotaging the global economy by isolating Russia, claiming Moscow had not only adapted but learned to weaponize the pressure. Zakharova may frame it as resilience, but the numbers tell another story. Russia's GDP is now projected to grow more slowly than the global average. And with oil revenues declining and defense spending unsustainably high, even state propaganda can't paper over every crack. For now, the Kremlin keeps the wartime wheels turning. But as the IMF's report suggests, momentum can't replace stability. Russia may have learned to endure sanctions, but enduring is not the same as thriving.
And now let's zone in on the east-planning portion of our show. When Russia launched its full-scale invasion of Ukraine in 2022, many expected its economy to crash. Instead, the Kremlin quickly retooled its economy for war. But 3 years on, that model is showing cracks. Here's how Russia's economy has changed in a nutshell.
At first, the shock was real, but short-lived. Western sanctions froze half of Russia's foreign reserves and slashed imports. Yet by the end of 2022, GDP has only shrunk by around 2%. A global spike in energy prices helped Russia weather the initial blow, with oil and gas revenue surging and the ruble surprisingly rebounding. By 2023, the Kremlin had fully embraced a war-driven growth model. GDP rebounded by 3.6%, driven by massive state contracts for weapons, ammunition and infrastructure. Salaries in defense-related industries soared. Unemployment dropped below 4%. For ordinary Russians, the economy looked stable, at least on the surface. Defense spending became the engine of growth. By the end of 2025, the military budget is expected to consume over 6% of GDP, twice the share from pre-war years. Nearly 4 million people now work in defense-linked sectors. Russia is producing artillery shells faster than all NATO countries combined, but the war economy engine is starting to sputter. In the first quarter of 2025, GDP growth fell to just 1.4% year-on-year. Manufacturing slowed. Construction, trade and real estate all declined. The IMF slashed Russia's growth forecast for the year to just 0.9%. Oil and gas, once Russia's economic backbone, are now a headache. Revenues in the second quarter of 2025 dropped 18% year-on-year, even though exports volume increased. A stronger ruble, partially due to falling imports, is undercutting budget income, forcing cuts in regional spending. Russia's economy has survived 3 years of war, but not without deep trade-offs. What began as a short-term wartime pivot has hardened into a militarized system. And now with growth slowing, inflation high and oil revenues falling, the cracks are becoming harder to hide.
And now let's take a look at the issue in greater detail. Russia's brief wartime economic boom is now showing clear signs of unraveling as the International Monetary Fund sharply downgrades its growth forecast for the country. After withering international sanctions and fueling a short-term surge through massive military expenditures, the Russian economy is now facing a pronounced slowdown. The IMF's latest projections forecast GDP growth of just 0.9% in 2025, a notable drop from the 1.5% estimate issued in April, and a dramatic fall from 2023's 4.1% expansion. The reasons are multifaceted. Key indicators such as retail sales, industrial production, and manufacturing have weakened, while employment levels have softened. Russia's GDP growth for the first quarter of 2025 dropped to 1.4%, down significantly from the 4.5% the previous quarter. Now, the IMF attributes much of the decline to tighter fiscal and monetary policies and a slump in global oil prices, an essential pillar of Russia's revenue base. Despite a surprising upward revision in 2024, growth pegged at 4.3% due to strong late-year momentum, the broader trend points towards stagnation. Russia is now expected to lag behind major global economies, with growth forecasts well below those of the United States, China, and India. At the same time, geopolitical tensions are compounding economic uncertainty. President Donald Trump recently issued an ultimatum to the Kremlin, threatening fresh tariffs unless a ceasefire in Ukraine is reached within 10 days. The announcement sent oil prices spiking to $70 a barrel, though the bump may offer only temporarily relief for Moscow. Domestically, concern is rising. Russia's economy minister has warned of a looming recession, even as the central bank attempts to stimulate demand by lowering interest rates. What was once a wartime economic boom now appears to be transitioning into a period of fragility and constrained growth. And now here to shed more light on the issue is Mark McNamee, co-founder of Ukraine Business News Network. Hello, sir, and welcome to Eastern Express.
Hello, thanks for having me.
So today we're trying to unpack the Russian economy, since we recently saw the IMF kind of downgrade of Russia's GDP forecast. And interesting enough, recently the head of the central bank actually came out and said that the Russians might have to tighten their belts. That's actually something quite rare, seeing that even the Russian officials themselves are saying that things aren't looking that good. Just how significant is the problem?
I think they're preparing the population, politically, socially, for really going forward. Next month, next 6 months, year, 2 years, 3 years, there are no growth drivers. So they're laying the foundation to prepare the population to understand that this is the future. Don't think in 6 months or a year your current conditions are going to suddenly start improving. Actually, they're going to continue to deteriorate going forward. And these are just economic financial realities. This is much delayed, of course, so the population got to enjoy some of this, all the expenditures we saw, the fiscal splurge on defense and benefits to veterans of fighting, et cetera, et cetera. But now the reckoning is coming, and they have no other choice. The government they can't hide this reality from the population, particularly as it's permanent. There's no reason to believe that there's any upside coming for the Russian economy going forward. It's just a matter of how bad it gets, how quickly. So it's the astute move to do, frankly, being a little bit more direct, a little bit more honest to the population, and of course they're massaging this under the need to, of course, support the front, support the soldiers of the front, support the war effort, war under attack. These are the necessary sacrifices that our population has to make. So, of course, they're sort of couching it in those terms. But this is problematic because, it's permanent.
And how much do you think the dip in oil price is going to further impact the Russian economy? Do you think that this recent Trump-U.S. deal, U.S.-EU deal, that the EU is going to spend $750 billion worth of revenue on U.S. energy is also going to significantly impact Russia's war offer?
No, not particularly. That's not the area to look. That could be beneficial if, in fact, that comes to fruition. Right? There's no real monitoring or compliance to enforce that mechanism, because there is no mechanism to have European markets replace their Russian LNG imports with US LNG. So that's the first issue, is that when did that happen and under what conditions and to what degree? But secondly, Russia's LNG exports to the EU are not what's driving their financial strength and ability to prosecute the war at such a high level. Really, you have to look at Russia's oil exports. Oil has always been dominant in Russia's energy exports. 75-80% of Russia's energy export revenues coming from oil exports as opposed to gas. So we shouldn't be looking so much at gas and specifically at LNG. We should be looking at Russia's oil exports. And when we look at Russia's oil exports, they go to India and China, almost 90% going to India and China. So that's where you have to look. And that's why we need to be watching here in the next week what happens with Trump's pressure on both India and China. Looks like the pressure on China would be announced more next week with the secondary sanctions that Trump has threatened. But the pressure on India, according to the Trump's tweets of the last 2 days, we should know what that policy looks like come Friday, or at least India's response once those sanctions are put in. Trump has already announced the policy, 25% tariffs. Now, India does trade particularly much with the U.S., so as it will be with China next week, we're going to see sort of, this is the first salvo, and then after this, we'll see sort of tit for tat negotiating, going back and forth, and this is what Trump assuredly wants and is trying to push for. And frankly, I'm relatively cautiously optimistic, as I have been all along, about Trump's policy towards Ukraine, despite all of the unfortunate downturns that we have seen. Nonetheless, Trump seems to have sort of gotten the message and is back on the right side of things, supporting Ukraine. And so I do believe he's going to put considerable pressure, as much as the U.S. economy can bear, and Western economies in general, as they align sanctions with European markets, that we're going to see a much tougher response towards Russia to try to stop the killing. And to do that, you need to go after Russia's oil exports. To do that, you need to go after China and India. So we're going to see what this policy looks like here in the coming days.
Right. You also mentioned earlier that in the beginning, Russians have strengthened their economy paradoxically through a lot of wartime investments. But how did that affect kind of, the non-war related industries?
That drove up, that sustained consumer spending to a quite substantial level. So, but again, that has sort of petered out by now. So that was very positive because you saw incomes rising dramatically, obviously in the defense sector. So that drove up incomes then to compete in the civilian sectors, which then drove up prices of goods and inflation, but it also drove up incomes. Now we're getting to the point where inflation and incomes are more or less matching each other. So now you're going to start seeing much more pressure on incomes because of the relatively high inflation. And so that's why you're going to see consumer spending. And we're already seeing this in the first half of this year. We've seen a clear slowdown in consumer spending that had been so solid for the last 2-3 years now. However, on the business side of things, again, the extreme cost pressure from the labor market, which is going to continue. You're going to have very high labor prices going forward, but that's also matched with extraordinarily high interest rates. So over 20%, they have cut them down, but they are still prohibitively expensive. So you have high labor costs you have to deal with. A lot of companies we're seeing, and not just small, medium enterprises, but large companies in Russia having problems with debt in terms of course, the majority of companies had free-floating rates in their debt agreements. So that makes their debt payments that much more expensive. So this has been massively problematic, and we're seeing that now. We're seeing some of these civilian sectors in the first half of this year slowing down. Industrial production has slowed down. Of course, defense-related areas continue to grow solidly, thanks, of course, to a lot of state stimulus. But we are seeing the civilian side of things going down. So that's why in the first half of this year, industrial production is around 1% roughly. And again, that should be the peak. Second half of the year, a further slowdown, 2026. There's no real reason to think we would see really any growth. And we should see decline in the civilian side of the economy.
All right, you mentioned thanks to a lot of state subsidies, there is still, some semblance of stability in the defense sector. But of course, the state doesn't make its own money. It has to tap from somewhere else. How is that going to impact the health of the economy in the long term?
You mean the reliance on the defense sector? Mm-hmm. Yes. So going forward, of course, this is going to be continued problematic. This is going to continue to pull manpower, take men out of the civilian side of the economy and pushing them more into the defense sector, as that's the only thriving sector. That's where payments remain relatively high. And so, of course, the government then they have this spiral that they have to keep up with. So they have to continue to sustain those wages in order to sustain the economy. So the economy gets, of course, even further centralized and on the defense sector. And the defense sector, unlike other areas like, say, construction or other manufacturing sectors, there aren't sort of value added degrees for the economy going forward. You build a missile, you create some ammunition that's then used at the front one time. So there are not sort of secondary and tertiary benefits for the economy going forward. So of course, this is not a formula for success for the long term, which is why I said at the beginning, this is a permanent problem that they can't correct. They're relying on energy export revenues, which now the West, hopefully under Trump, is going to be attacking much more strongly. And then the domestic defense sector, which is subsidized by China and the export revenues that they sell to both China and India to sustain that going forward. So not a particularly dynamic economy, of course, no drivers for growth going forward. And these extremely high interest rates, which are starting to come down, but will remain extremely high for the rest of this year and into 2026, forbids any domestic stimulus in the non-defense sector of the economy.
Right. So like I mentioned, they're going in the downhill direction that they perhaps cannot correct any longer. Do you think that there's any policy, any response, any attempt at changing course before it reaches any semblance of a critical velocity of kind of just economic downturn? Or do you think at this point, it again, like you mentioned, perhaps there's no way of turning it back any longer?
Yeah, well, there's no way of turning it back as long as Putin is ideologically so continually obsessed with the war in Ukraine. And remember, this war started in 2014, and Putin's obsession with Ukraine, we know, started well before that. And it started before Putin, by the way. Moscow's obsession with Ukraine has always existed for the last 400 years as part of Moscow's, of Russia's, of Putin's, of the Kremlin's historic political culture, which demands that Ukraine has to be part of Moscow's empire. Assuming that does not change, which there is absolutely no reason to think that would change based upon all of the rhetoric of Putin and the top Kremlin advisors around him, that means the war has to continue, and that means the war has to be prosecuted and financed. And as a result of that, no, there can't be any other opening of the market, new sectors that can be invested in and subsidized by the government, as everything is as they have been saying, is everything is for the front. So no, there's no real alternative for them. The only alternative, which we continue to expect here, is that in 2026 at some point, because of the financial and economic problems that Russia is going to have, they will slow down the war and maybe agree to some sort of temporary pause. I don't want to call it a ceasefire because it's just simply an operational pause in order to sort of get the resources back, right? And consolidate things and get stronger for a future further offensive in order to push towards Putin's goal of subjugating Ukraine as a state. So if that takes 10 years to get there with multiple operational pauses on the way, then fine. But those operational pauses can provide some relief then to the domestic economy and at least stop the bleeding temporarily until the next iteration of hostile actions. So the answer to your question is the only way they can manage things on the economic side and the financial side of things for Russia is by simply slowing down the war and slowing it from this extremely high tempo that it's been really for the last 3.5 years, but particularly for the last year.
Right. So long as Putin pursue his war, the Russians will have to tighten their belt, and perhaps it's not just a fashion statement. Thank you so much for your input and insight. Really appreciate it. And thanks for being with us on the Eastern Express.
Thank you.
And now we're moving on to the Eastern News Flash, a series of all the other stories from the East that you don't want to miss. Ukraine has just approved sanctions against Russia's shadow fleet. Now, these are tankers used to dodge Western oil price caps.
President Volodymyr Zelensky has signed into law new sanctions targeting Russia's secretive oil tanker network, known as the Shadow Fleet. The law blocks access to Ukrainian waters for ships suspected of carrying sanctioned Russian oil and bars their owners from doing business with Ukraine. The Kremlin has increasingly used aging tankers with obscured ownership to reroute oil exports and bypass Western sanctions. Kyiv says the fleet helps Moscow finance its war machine and must be disrupted. The law also lays the groundwork for confiscating tankers caught violating restrictions in Ukrainian-controlled waters.
Ukrainian intelligence says it has hacked evidence of Kremlin-run child deportation operations. The files show detailed coordination between officials and occupational authorities.
Ukraine's Defense Intelligence Directorate claims that it had obtained classified Russian documents proving systemic deportations of Ukrainian children from occupied territories. The hacked files allegedly contain orders from top Russian officials coordinating transfers to Crimea, mainland Russia and Belarus. One document reportedly refers to the deportation of 2,442 children from Kherson and Zaporizhia alone. The revelations support Ukraine's case at the International Criminal Court, which earlier issued arrest warrants for Vladimir Putin and his Children's Rights Commissioner. Kyiv says the new material shows the abductions were not isolated incidents, but a state-organized campaign.
Ukraine's largest bank has won a massive fraud case in a London court. Oligarch Ihor Kolomoisky now faces a nearly $2 billion judgment.
Privatbank has secured a major legal victory in the UK High Court, which ruled that former owners Ihor Kolomoisky and Gennady Bogolyubov used fraudulent schemes to siphon off nearly $2 billion. The ruling caps years of legal battles over the bank's finances before it was nationalized in 2016. The court found that the oligarchs funneled money through offshore firms and fake loan arrangements to buy property and assets abroad. Ukrainian authorities call the ruling a milestone in their fight against corruption. Kolomoisky, once close to President Zelensky, is already under arrest in Ukraine on separate charges of embezzlement and money laundering.
And that's all for this episode of Eastern Express. But for more news, update, and commentary, please stay tuned to TVP World.